Welcome back, and you're watching Buy Now Sell Now on ET Now. Before we get started with all your stock related queries, what is important to know is how should you be protecting yourself from the uncertainty, volatility in the markets. What should one be doing in the markets to protect themselves? And Ashish, as an investor, what is the advice that you would give to someone who is in the markets in this volatility? What should they be doing to protect themselves?
I'm suggesting three strategies how you can make money and not lose money in the market. And to make things simple, I've just there are three new movies which have come up. I have just tried to correlate with that. So first of thing, one movie is Bhola. So as an investor, you should not become Bhola. You should need to become smart. So don't follow those YouTube channels which are offering so many attractive price ki 10 rupees stock will come 1000 rupees, etc. Do your own research and be smart. Second is a new movie which has come is called Gumrah. So you should not get Gumrah with all these fast money making offers which you are getting on your mobile phones or through various telegram channels and blah blah. So you should not get Gumrah. And third movie is Fastex, which has come up. So you should not try to make very fast money. You are in right business of making money by way of investing in a stock. So don't try to trade too much into a future and options. Instead of this, keep on doing investment by long-term investment. So slow and steady here wins the race, not fast X.
Ashish, thank you so much for that advice. That was quite interesting. And we are getting to see a lot of trading holidays, and surely you are taking benefit of that. So that's the advice coming in for all our retail investors in a movie fashion, I would say. But let's move forward and kickstart taking all your stock related queries. Viewers, you can connect with us on a WhatsApp number that is flashing right on your screen, and you can also WhatsApp a query onto our Twitter account as well. But let's kickstart. And the first question that I have, Ashish, is coming from Anurag from Chennai, and he's holding 20 shares of Hiranba Industries at an average price of 747 rupees. How are the prospects looking like for this one, and is that a hold or sell at these levels?
No, it's a sale in my view. Stock has not rewarded investor for quite some time, and it's quite subdued. Though slightly, we have seen minor gains in the stock in off late, but this just because the sentiment is improving, along with there is a lack of too much liquidity and interest in this stock per se from institutional side. So I suggest instead of this, you buy automobile stock, which I'll suggest you buy Atul Auto, which is at around 410 levels. And the way three-wheeler EV, like what they have launched and the kind of big demand which is coming up in three-wheelers from Pan India, this company, which is just 1,000 crore market cap company, which will do well in this particular year. So sell Heramba and buy Atul Auto will be my strategy.
Okay, Kunal, the next query we have, and this one is coming in from Anand from Coimbatore, and they have 100 shares of SRF. What should they be doing with this one? They're holding it at the price of 1,800 rupees per share. Should they hold or sell this?
So I think if you're holding at 1,800, the stock is already giving you more than, I think, 40%, 50% kind of returns at current levels of 2,400. So it's a good strategy that you should continue to hold on. SRF is one of the stock which tends to do extremely well in short bursts of time, and for most part of the time frame, the stock gets into a phase of consolidation. Like what we've seen over the last 1 or 2 years, 2021, 22, the stock remained into a very narrow or a range bound kind of a trade for itself. And recently, this is where the stock is showing signs of a breakout. So I believe that if this breakout holds true for SRF, we can expect levels of even 2,500 to 600 over the very near term. So I think you should continue to hold on.
Okay, Kunal, the next query once again for you. Vivek is holding shares of Titan from a price of 2,300 rupees. He wants to know, is there a good time to book profits out of this one? And but he can still hold this counter for the next 1 year.
So if you ask me from a short-term view, then my sense is that it's good time to book out profits, because I would expect say somewhere around 50 rupees to 100 rupees kind of a correction, which is a very meager kind of a correction looking at your stance of 1 year. So I believe that you should not tinker with your investments as such if your time frame is 1 year plus, because I believe in that kind of a time frame you might have those odd corrections as well as rallies in between, but trajectory for the stock is more important, and that seems to be on the upside for Titan. So unless you are a short term investor and you want to take advantage of a possible 50 to 100 point correction on the stock, only then I would suggest to book profits and look to buy back at lower levels. But if you are quite confident of holding on to it from a longer term time frame, then I think you should continue to hold on.
Okay. Ashish, the next one is for you. This one is from Balan, and this one is on Kajaria Ceramics. They have Kajaria Ceramics at 1,250 rupees. Should they continue to hold this, or maybe move to a real estate name like Godrej Properties for the next 1 year? Is their hold period, or more than that? Is there what they're willing to hold for?
Yes, I fully agree with you. Instead of buying a ceramic stock, we should buy some realty stock only, and where a lot of value is there. Again, Godrej is a good stock in a way because stock has come down from 1700 odd levels to three-digit stock, and now you're getting the stock near 52-week lows only. So you don't have anything to lose, and the way prospects have improved and the kind of visibility is there in earnings in next couple of years from Godrej Properties on account of robust cash flows along with new projects. This will give you much better return compared to Kajaria Ceramics. So this will be a prudent move.
Okay, just marking the flash on the bottom of your screen. That's the commentary coming from SkyMet, where they believe that this time around India could witness and rainfall to be below average at a percentage they are giving is at 94%. India was already fearing the risk of El Nino this time around for the monsoons, and the commentary from SkyMet is also coming on the same line. But moving on to the next query that I have, Ashish, is coming from Mathi from Trichy, and she's holding shares of Camlin Fine Sciences, 150 shares at a price of 300 rupees. She can still hold it for the next 6 months. What's your advice coming in on this one, and any target price that you have for Camlin Fine Sciences?
Again, this is again a stock which has underperformed of late because on account of entire sector in subdued mode for quite some time. But still, this is a good quality company, good management, and good product line. So I suggest to remain invested here and just look for exit at 175, 180 levels because I don't see too much downside now left. That is why I'm not advising to exit or switch to any other stock. Once you exit the stock 175, 180 level, just raise your query once again. The show will surely suggest some another good play.
View on Camlin Fine, but Kunal, the next query is from Vini, and he's a senior citizen from Hyderabad. They're holding Deepak Fertilizers 100 shares at 780 rupees per share. They're making a bit of a loss there right now. So can they continue to hold this or look to average?
Well, continue to hold on. Averaging out, I would probably suggest only if the stock goes back below that 550 mark. That could be a zone where I believe the indicators may a tad bit more oversold than what it is right now. So I think that could be a better level to buy, and it would also confirm a retest of the previous lows of 550 levels for Deepak Fertilizer. So a better level to average out would be at those levels. But I think as of now, you should look to hold on. It's been a wobbly 5 months for Deepak Fertilizer. The stock has corrected from 1000 to sub 600 levels, but I believe sooner than later the stock would get into a recovery phase. So hold is what I would recommend, but if you're looking to average, 550 could be a zone.
Okay, Ashish, the next query is for you. The question is from Sandeep Kumar, and he's already holding shares of Vedanta as well as REC in the portfolio. Do you recommend the same for the long term? And from the stock price perspective, what's your view coming in on both of these counters?
Yes, I am suggesting both you can continue to hold. First of Vedanta is always a good bet because the kind of mammoth dividend payout policy what they have, like it will keep you rewarding. In fact, last year we have seen almost 100 rupees, 100 plus rupees dividend came from Vedanta. So Vedanta is a short hold in my view, along with REC also. You can continue to remain invested because again we are seeing some movement coming in power stocks and REC, PFC, etc. are good play at this point of time.
Okay. Just hold on with us, Ashish, as well as Kunal. Obviously, the flashes that you can see coming in on your screens is about, what is the expectation coming in from the SkyMet in terms of the rains. And they expect upcoming monsoon to be below normal to the tune of 95% of the long-term period average. We have GP Sharma, President at SkyMet, joining in with us this morning to talk about that. Mr. Sharma, just give us an understanding in terms of below normal. Is that a bit of a worry that we should be watching out in terms of the monsoons for India?
Monsoon had a good run for the last 4 years in a row. So it was almost expected also that, and in view of the El Nino conditions which are building up, it is quite likely that the monsoon is likely to be below normal. Below normal means, you see, the rainfall, anything between 96 to 104 is normal. Less than 96, it becomes a little below normal rainfall. Okay. So we are giving at the moment predicting that the monsoon is going to be below normal, and possibly it may not be that bad to start with. The beginning of the monsoon may be a little okay, but then halfway through the season we expect it to possibly go into a little a state of dormant, and then that is when the rainfall is possibly going to be less than in the last second half of the season also. Yes.
Okay, hi, very good morning, Mr. Sharma. This is Shrishti joining in. As India was already fearing the risk of El Nino, would you concur with that view that this percentage that you are coming up with 94%, would you mark this as the El Nino risk for India? And also give us a sense on the region-wise expectation this time around. When you term it as below normal, then which are the regions which are at more risk to experience the same?
Yes. You see, we have given below normal. Below normal means the range is 90 to 95, 90 to 95% of the long period average. As we know, the long period average is 868.6 millimeter now. So we expect about 94%, and with the error margin of plus minus 5%, which is always there for the numerical models. Okay, and El Nino years, so we see that the central parts, northern parts, they come at a bigger risk than the others, than the southern parts and the northeastern parts, and so is the case this time. The central parts mean even parts of Maharashtra, Madhya Pradesh, and the northern parts mean Gujarat, Rajasthan, Punjab, Haryana, including Uttar Pradesh. They will be at risk of having a below normal rains during the monsoon season. Yes.
Okay, Mr. Sharma. I just want to understand what also in terms of the other factors that are influencing other than El Nino, and obviously that El Nino factor, is there a chance of, that reducing and receding going forward? Is that an expectation we could hope for?
There are other factors also, but as you said, the El Nino is the main player, is the spoiler of the monsoon as such, as the history dictates that El Nino conditions have resulted 80% of the occasions into below normal or even some drought conditions also. Okay, so El Nino is building up at the moment. You said, is there any chance of decreasing? At the moment, it is rising. It will grow. It will grow during the monsoon months, and then during the second half of the monsoon, the probability is more. It's almost about rising more than 60%. So thereafter, possibly in the fall of the year or so, in the winter months, they will decline. But before that, there is no chance. It's growing, and it's growing phenomenally. I will say the rise is very, very rapid. Yes.
Okay, Mr. Sharma, thank you so much for joining in with us this morning and giving us an understanding on the expectations from the monsoon as well. On that note, viewers, we're going to slip into a very short break. Don't go anywhere because we'll be continuing with your stock-related queries after this break.
Welcome back to Buy Now Sell Now, a show where you get all your stock-related queries answered by the experts. And continuing with the same, the next question, Ashish, is coming from Pooja. And this question is on Deepak Nitride. She's holding 10 shares from an average price of 1790 rupees. Wanted to know if that's a sell, hold or exit at these or add at these levels. And she's looking to stay invested for the long-term period for the next 3 to 5 years. So your view?
For the next 3 to 5 years, I don't see any issue as far as Deepak Nitrite is concerned, because they are having monopoly in nitric acid and its derivative products in India. Only thing is, as the prices of other chemicals have come down in line with that, nitric acid prices has also come subsided quite a bit. So this is the reason we have seen a lot of correction coming here. But in my view, whatever the chemical stocks are there, they are just bottoming out. So I'll not advise to sell at this price point, and you can continue to remain invested. And if you get this stock at 1700 odd level some more, if in some more correction, then you can even think for even averaging it out also.
Kunal, we have this next query which is coming in from Kaushik Mitra, and they want to know, is it actually a good move in terms of an investment to shift from RIL to LNT? Because in RIL, Kaushik is holding it for more than 2 years and at an average of around 2,500 rupees. So they're making a loss on that. So would it be better to shift to LNT then?
No, not really. I would not suggest a shift from RIL to LNT. Both of them are solitary trades. You need to be ideally as a an ideal portfolio. You need to be invested into both of these stocks separately. But shifting from one large cap name to the other just because Reliance has not performed in the last 1 year, I think is not a right strategy where you should look to exit the stock. My sense is that the stock has this odd tendency of going into multi-year consolidation before it tends to break out. Classical example for Reliance Industries, which I can attribute, is say 2007 to 2017. The stock remained in a band of, I think, 150 odd rupees. 550 was the breakout point for Reliance Industries adjusted price, and the stock from those 550 levels in 2017 ended at 10 years of consolidation and gave returns of more than 4x to 5x, where the stock moved up to, I think, 2800 plus mark for itself. So that's what large caps they tend to do. They may get into a phase of consolidation at certain points of time, but then they would eventually reward a long-term investor. So I think you should stay put with Reliance Industries.
Okay, stay put with Reliance Industries. That's the advice coming in. But moving on to the next question, Ashish, the question is from Bisakha, and she's holding two shares. One is Fine Organics, sitting at a loss of 24%. But on the other side, she is holding Sharda Cropchem with a gains of 22%. What's your advice on both of these counters? And she is ready to stay invested for the next 3 to 5 years.
Okay, if 3 to 5 year time frame is there, then we don't need to worry at all. Both are fundamentally sound companies. Again, I'll reiterate that these chemical stocks are now almost hitting bottom. Like you're seeing in the last 3 months, Fine Organic has lost almost 1300 rupees. And from lows of 4,000, again, the stock is showing its upward journey after some consolidation. So fundamentally, nothing wrong with these chemical companies. Whatever the expansion projects these companies have undertaken in the last couple of years are going to be live in this year, particularly in FY24. We'll see a lot of capacity being added by Fine as well as Sharda Cropchem, both these companies. So my suggestion is to stay put and remain invested for 3 years. So both companies are going to do well.
Okay, Kunal, next query, and this one is coming in from Dikshita, and it's on Sun TV. She's currently making a loss of around 12% on Sun TV. Should they continue to hold this, average it out maybe at the current price, or wait for a bit more downside?
See, ideally, I would have said to hold the stock as well as average. But the only concern with stock like Sun TV is that it's been an underperformer. Over the last so many years. From 2017 was the year where the stock made a high of 1000 plus levels. From there, it corrected towards, I think, 250 or 275, which was the low during the COVID era for Sun TV. And from there, the stock has just recovered to 500 odd mark, 500, 550 was, I think, the range high for Sun TV. So the correction has been very sharp, the bounce has been very shallow, and that's ideally not a suited stock from a portfolio perspective. So you can just hold on to your existing quantity as of now. No need to average or add at current levels. In case if the stock bounces back and say comes very close to your cost price, that's a good zone we should look to exit.
Okay, moving on to the next question, and Ashish, the question is from Kabir Bedi, and he invested into Med Plus Health, entered 250 quantity at a price of 645 levels. Wants to know the medium term view for the next 3 to 6 months for this particular counter.
Ashish? Sorry, I missed the name of the company.
Med Plus Health. He invested near about the current market price. Ashish, one of the recent listing, Med Plus Health. Do you track this one?
Yeah. Yes. in my view, again, these pharma companies and hospital-related companies will be in the limelight because of rising COVID cases. So my suggestion will be to remain invested in Med Plus Health, and this can give you good returns going forward also. In fact, any new investors are, if they are looking to enter in this stock, they can also enter at this price point.
Venkat Rao from Vishakhapatnam wants your view on IRCTC and HDFC Life. They purchased IRCTC 100 shares at 840 rupees, while HDFC Life 400 shares at 715 rupees. Should they look to average this, and if yes, at what price?
Yeah, I think both these stocks are an average, I would say, from my side. IRCTC has gone through a phase of a very sharp correction for itself, trading below the 600 mark right now. So it's a good zone where you can look to average. You can start averaging at current levels for IRCTC. HDFC Life also I would suggest to average out, but then the averaging out could be at slightly lower levels. I think the stock made a recent low for itself around the 470 mark, 460, 470 mark. Currently it's at 513 levels. Let the stock settle back again below the 500 levels. So maybe 490, 495 could be a better zone to average HDFC Life.
Okay, Ashish, the next question is from Chandrasekharan, and he's holding 100 shares of MTAR Technologies for the past 1 year from a price of 2,400. So currently at a loss of over 30%. Wants to know, should he average at current levels or exit, and he can still hold on for the next 2 years? Your advice.
So this is a stock which he has bought it really at a very high price point, and we have seen the stock not going anywhere in spite of the fact that defense stock have started moving up. So my suggestion will be to exit from this stock, and I'll suggest another stock that you can add is Zen Technologies. So this is again a company which is into anti-drone and simulation related business, and I'm expecting whatever the order book company was having last year, almost 100% growth I'm expecting in this year from Zen Technologies, because they are getting some really big orders. So you better sell MTAR and shift to Zen Technology in the same sector.
Okay, Kunal Jayakrishan from Kerala wants to know the entry level for ABB, medium term and with a stop loss as well.
So I think if you're looking to enter the stock at current levels, rather than that, I think you should look to maybe buy at 3,350 rupees for ABB. This is on cash levels. My expectation is that the stock is going into a patch of consolidation, and the lower end of this consolidation is at 3,300 mark. So you can just keep maybe 3,350 as a good entry point for ABB. On the upside, you can look out for targets of 3,450 and stop loss, as I said, 3,300.
Okay, Kunal, what's your view on Infosys? Ramchandran is holding 4,000 shares of Infosys from a price of 1,715 rupees. Currently at a loss, but he wants to know, is that a hold or switch to any other IT name? What's your advice coming in, and by what time do you expect that stock to inch up back to 1,700 levels?
Well, I think maybe the worst could be behind for these IT stocks. That's the best which you can probably look out for in terms of the charts, because most of these large caps, and if I can probably add even the mid cap IT names, have gone through a very sharp correction from their 2021 end highs or 2022 start highs for themselves. Now it's both a time wise as well as a price wise correction which has happened for Infosys. I think at current levels, I would suggest to hold on to the stock price. Very difficult to say that by when will the stocks come back towards the 1700 mark or your cost price. But I believe large cap stocks, they eventually make a strong and a durable comeback. And look at it this way, that Infosys has been one of the stocks which has managed to absorb most part of the volatility for the IT names in a very strong fashion as compared to these large cap or mid cap IT stocks which have fallen by more than 50% as well from their previous highs. So stay on with Infosys and hold on to it for at least another couple of quarters, if not more.
Ashish, Subha Murli from Bangalore wants to know your view on Bharat Electronics. They're holding 200 shares at 101 rupees. What's your long-term view on this?
I think after a lot of consolidation phase that the stock has seen now, stock is seeing again a good run up. And again, I was telling you that the defense stocks are going to be in limelight in this year because the kind of huge orders BEL and other companies are getting. So my suggestion will be to remain invested. Though targets are not that big, but I am expecting 110 should come in next 3-4 months here in BEL.
Okay, Ashish, coming to you for the next one. The question is from D. Mazumdar, and he's holding shares of IGL, the one of the news buzzers in the recent time on the back of the Kirit Parikh recommendations. But he is holding 200 shares from a price of 395 rupees. Currently sitting at a profit. What to do next, and what to expect next for IGL? Question is for you. Okay, I guess might be some audio issue. Kunal, would you like to take up any technical view on IGL?
So it's an attractive chart. I think we also discussed IGL as one of the picks sometime back, almost a few weeks back. The stock has done reasonably well. It's come back towards I think a 52-week high, or maybe slightly less than that if I'm not wrong today. But I think at current levels, if you're a short-term trader, you could look to book out profits on the stock price, assuming if you've bought at lower levels. My belief is that the stock may probably get into a mild correction, say come back towards 430 to 440 zone. So better level to buy back IGL would be sub the 440 mark.
Okay, Ashish, Pooja wants your view on Deepak fertilizers. We did talk about it before as well, but she's holding 10 quantities of Deepak fertilizers at an average price of 1,790 rupees per share. She's a long-term investor. 3 to 5 years is what she's ready to hold it for. So should she continue to hold, add more, sell? What's your view?
So I'll suggest to exit from Deepak Fertilizer because I don't see too big kind of rallies, or because the valuations are quite rich as far as Deepak Fertilizer is concerned. So my suggestion will be, instead of this, I'll suggest you another large cap stock, which is Interglobe Aviation. You can buy for 3 to 5 years, and I'm expecting very big run up in this stock going forward. Instead of last year, they did a net loss of 6,000 crore. I'm expecting, the way aviation industry and Indigo is performing this year, they will do not less than 9,000 crore profit in FY24. So this is going to be a dark horse and can give you very good returns instead of Deepak Fertilizer.
Interglobe Aviation could be the dark horse as per Ashish. Moving on to the next question and switching space to the auto sector now. Kunal, the question is from Ramesh, and he's already holding 2 auto counters. One is Bajaj Auto, entered at a price of 3,500, sitting at a profit, and the other one is Eicher Motors, currently at a loss as he entered around 3,500. He can still hold for the next 6 months. And what's your view? Is that a sell right now and buy at better prices later? What's your view coming in?
I think we should look to hold on both of these stocks, Bajaj Auto as well as Eicher Motors. In fact, rather for Eicher Motors is what you can switch to, either add Bajaj Auto at current levels, because I think the breakout on the longer term time frame is just about yet to happen for the stock price. Or else, if you're looking to buy some other auto stock name, then I think I would recommend Tata Motors even at current levels of 455, 460, where the stock is trading right now. So depends on your risk appetite and your time frame. Ideally, I think Bajaj Auto is something which I would recommend to hold. Eicher Motors, in case if you're looking to switch, then I would believe go back to Bajaj Auto, average more quantity over there. If you're looking to add another stock from the auto pack, Tata Motors is the stock which I would recommend.
Kunal, I'm going to come back to you, and this query is coming in from S. Gopalakrishnan, and this one is from Muscat. They want your short-term technical view on Bata. They're holding Bata 125 shares at 1,710 rupees, as well as Tata Chemicals 100 shares at 1,125 rupees. What should they be doing?
Well, I think you should look to hold on both of these names. Tata Chemicals, in fact, on the short-term charts, looks attractive for 1,040 to 50 mark over the very near term, but I think the stock could probably even surprise more on the upside. Bata India, the stock has corrected very sharply. Now, the good part is that the monthly charts indicators are getting into an oversold territory for Bata India. So that makes the trade a bit more attractive. Sooner or later, the stock would get into a recovery phase and bounce off from this deep oversold territory. So I would suggest to hold on Bata as well.
Okay, that's the view coming in. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's keep it going with your stock related queries. Okay, the next query I'm taking, Kunal, this one is for you, and it's a bit of a longish one. We have Srividya from Chennai, who's writing about life insurance companies. Now, what they are saying is that March 23 saw a robust collection in terms of premium for life insurance companies, which was, for a few of the companies, it was actually much more than in the last 11 months is what they've done, is what they're highlighting in the month of March, and just 1 month is what they've made. Now, keeping this in mind, valuations, results, everything that is declared, how are life insurance companies looking to you? Would you suggest to buy something like an HDFC Life, ICICI, or a Max Life at current levels?
Well, I think as I highlighted just about few queries back that I think from the insurance pack, in specifically life insurance, if you're looking to buy these stocks, then I would believe that you have to wait out for a marginal phase of correction. Now, for HDFC Life, for example, a query which we discussed earlier, my belief is that the stock may get into a mild correction back again. So it's always better to buy the stock. So I think 490, 495 is where I flagged off, as a better level to buy HDFC Life. You can probably look out for a similar 5% odd correction for rest of the other life insurance names. But I believe that maybe the best part of the uptrend for these life insurance stocks could be behind us. So they could be good value buys at maybe mild dips for themselves. But from a longer term play, I believe that these stocks may get into mild phase of consolidation first and then a gradual uptrend. So you have to be patient enough over here if you are in from long term play. Buy on dips is what I would recommend for these stocks, specifically HDFC Life, closer to 490, 495 mark.
Okay, that's the view coming in. But moving on to the next query, the question is from Pradeep and Ashish. He's holding shares of LG Balakrishnan, 200 quantity from a price of 744 rupees. He wants to know, is this the right time to book profits in this particular counter?
Oh, I think you can remain invested here because fundamentally this is very sound company, and we have seen very good set of numbers also from this company going forward in previous last few quarters. And this chart is also showing last 3 months, though markets are going down, this stock is up by 100 odd rupees. So my suggestion will be remain invested in fundamentally good companies. I am expecting good set of numbers in this quarter also from LG Balakrishnan.
Next query is from Narayan from Chennai, and this one is on Jindal Polyfilms. They have this stock at 900 rupees per share. Should they average out now? Should they exit the stock? What's the view on this one? Because obviously they are making a loss on it. So when can they expect a recovery actually coming back for their price?
Yeah, the only positive part for Jindal Poly, because of the recent sell-off, has been very steep for the stock from 1050 to almost 550, 570, where the stock settled off. In fact, 500 or below was where the correction ended off for Jindal Poly, and the stock is seeing a bounce. The only positive part, as I said, is that the volumes over the last 1 month of this bounce for the stock price has been very strong, and it could probably be an indication that maybe the stock is getting into a demand zone or settling into a recovery phase. So I think you should look to hold on to the stock price. In case if you're looking to average, maybe 500 to 550 range could be a good zone to average.
Okay, moving on to the next question, and the next question is from Chandrasekhar, and Kunali wants to know your view on Z Entertainment. Is that a buy or avoid at these levels?
I would suggest to avoid the stock because of the heightened volatility for the stock price, lack or inconsistent trend for Z Entertainment. I think it's a good stock where you should look to avoid.
Okay, Ashish's next query, and this one is actually on the railway capex theme. The viewer wants to know, something like an RVNL, how much more upside is actually left for this one? What is your view overall on this sector?
Yes, I'm as far as I'm concerned on railway stock, I'm quite bullish on railway as a sector. And in my view, again, if you see RVNL kind of a stock, it is still 10 rupees below 52-week high. So a lot of upside is still to be covered up in RVNL. Along with this, I like the stock which are into wagon manufacturing, like Titagarh Wagon, which is again performing quite well along with this particular stock like RBNL. I'll not still advise to look at IRCTC or IRFC where a lot of retail participation is there. So instead of this, Titagarh Wagon and RVNL both looks attractive at even at this price point.
Okay, Kunal, the next question is from Perumal on an IT counter. He's holding shares of KPIT Technologies, 550 shares from a price of 350 rupees. Should he hold or sell at these levels? This is his question, and he's sitting at a good profits now.
See, after the recent sell-off for KPIT Tech, one thing is clear that the stock may get into selling pressure on every bounces. So it's always better that if you're making handsome profits on the stock price, to look out to book profits over here. Now you can look to book out profits 50% at current levels and then 50% in case if the stock bounces back to say 850 levels. An alternative which I would suggest from the IT pack itself could be Tech Mahindra. The stock looks very attractive at this 1100 odd mark for itself. It seems to be getting into all those classical or ticking off all those classical signs of breakouts, price volume breakout, indicator breakouts for itself on the short term as well as on the medium time scale. So shift from KPIT Tech to Tech Mahindra.
Ashish, the next query is on Sula Vineyards. Obviously, this one is a recently listed counter. It is a short-term query, so Kunal doesn't have a view on this. So, Ashish, I'm going to ask you this. Mudit from Bareilly has 80 shares of Sula Vineyards at 351 rupees per share. Do you have a view on this for the short to medium term?
Yeah, my view is positive as far as Sula Vineyard is concerned. In my view, even in fact, we have seen very good set of numbers in the last quarter also, and the way consumption is going up of red wine and various type of wine, this will continue to do well. Just wait for this quarterly set of numbers, then I'm expecting a stock will be again 380, 390 mark. So remain invested here.
That's the advice coming in. But with this, viewers, we'll kickstart the rapid fire session. And Ashish, the first question is coming your way. The question is from Saranya, and she invested in shares of K Fintech at a price of 366 rupees. Currently at a loss, but how are the prospects? Is that a hold? And any hopes on recovery?
I suggest to book loss here and shift to another stock, which is Elecon Engineering, quoting at 390, which will give you very good return. Results are on 25th April, so you will get good yield there compared to K Fintech.
Kunal, PR Reddy is holding 90 shares of Symphony at 1074 rupees. Should they continue to hold or exit this one?
Well, I would suggest to exit the stock.
Okay, Ashish Subramaniam is holding 15 shares of Vardhaman Holdings from a price of 3050 rupees. Is that a hold or sell?
It's a sale in my view.
Okay, Kunal, next query is from Bharat, and this one is on what should be the strategy for IEX if they bought it at 145 rupees and Vectors Food at 560 rupees. Should they continue to hold, exit? What's your view on these two?
Would recommend to hold both of these stocks.
Okay, Ashish, question is from Sambi Reddy, holding 110 shares of LIC from a price of 670 rupees. He's a long-term investor. Hold, average or exit? Ashish, this question is for you.
I think it's better to average at this price point.
Kunal, Sonali from Kolkata is holding GSFC shares, 1,750 shares at 142 rupees. Should they continue to hold or maybe sell it?
I would recommend to hold.
Okay, Ashish, one more question from Saranya, holding shares of Indus Stars from a price of 180 rupees. What's the prospect going for Indus Stars? Any hopes on recovery?
I'm not too bullish as far as telecom stocks are concerned. In my view, you can exit from this stock, and I suggest instead of this, you buy Parag Milk Food, which can give you better return, price at 85 rupees.
Okay, that was the last query on rapid fire as well as over the query segment. So thank you so much, Kunal, as well as Ashish, for joining in with us. And thank you so much, viewers, for writing in all your queries to us. Do send us your queries tomorrow because we'll be taking them tomorrow as well. With that, it's a goodbye from Shrishti, myself, as well as the team who put this show together. Don't go anywhere. Markets at noon will take the action forward.